who are you? What does your company do? And maybe do that in about 90 seconds or so. Like who are you here?
Yeah, man, I'm a former Marine turned house buyer, well, project manager, then turned house buyer, then turned landlord, then turned lender, then turned corporate executive, then turned retired, and now I'm a lender again. So that's me. And I've bought a couple thousand houses, done a couple billion in transactions.
Nice, nice. So let's talk about why we're talking today. So you currently have a campaign that's raising. Talk to me a bit about one, the company and kind of what the raise is for.
Yeah, man. So I've run some really big lenders, even an IPO with Blackstone back in 2021. Lending is broken. It serves Wall Street, not Main Street, and all the customers are on Main Street.
Yeah.
I listened to Simon Sinek's Start With Why, and this thing just hit me like a ton of bricks as motivation. And then I bought a $15,000 URL, and 2 years later, we've done 65 million in business.
Wow. Wow. So, you kind of hit it a little bit at it. So maybe let's talk about where you kind of were maybe in your life to jump into that. What was kind of the starting point? What really was that sort of trigger of like, hey, I think I could do this. I'm going to try this.
10 years ago, I helped create institutional finance for real estate investors. And
Hmm.
now almost all the products are institutional and they no longer meet what the customer wants. And it's a very commoditized business. It's all about rate, points, and fees. And when I listened to Simon Sinek Start With Why, it hit me like a ton of bricks. The problem with lending is no company aligns with the customer. It only aligns with the bank's profits. And
Hmm.
so we formed this company. The entire intention was to be owned by the customer or by the user or by the community so that we could serve our owners, not just a Wall Street bank.
Right, right, right. So, for our layman out there that may not understand this, maybe our retail investors that might be listening to this, what does that all mean? It sounds great. It's got a great marketing pitch. I mean, is this part of I saw on the website sort of the three-part philosophy. I mean, is it along those lines? Like, what does this really mean for that retail investor who doesn't quite understand this and may want to invest in something like this?
We are well, number one, we're not a startup anymore. We're mature. We've been in business over 2 years. We service entrepreneurs in America that are less sophisticated than the banks, and they are hard workers, and they revitalize communities, and they just want someone to help them get going. And that's where the logo and the name came from. Ternus is Latin for threefold.
Hmm.
The three-part triangle has the three pillars that every customer that we ever encounter wants. Number one is to make money. They want to make some money. Maybe they're limited
Right.
by their job or their education and they just want to make some money. Number two is they want to build passive income or cash flow. They've watched the late night infomercial, get rich in real estate, mailbox money, and they want that. They don't want to feel like they're going to have to work their whole life for a paycheck. And number three, the bottom foundation, the pillar, is most of our customers, almost all of our customers, want to build long-term wealth or create a legacy for their family. And they see real estate and real estate investing as a way to do it. So to date, most of our investors are our customers. And so they see owning the company as a way to get a share of the profits. They see owning the company as a way to help build their portfolio. They see owning the company as a way to keep our products and services true to what they really want versus true to what may produce a higher return for Wall Street.
Gotcha. Gotcha. Walk me through a little bit. Again, it seems like from my vantage point, as I was diving in for this, that you guys talk a little bit about like the speed of what you guys do and how that helps, and just maybe cutting through some of the red tape that's in the traditional sort of ways of doing this. Walk me through just what are we talking about when it comes to speed, and why is it important, and just how does that sort of work in the space?
Picture being an employee at any company in America, and you probably feel like you know how to do the job better than the bosses or the management want to. I'm a deal guy. I came from the streets and I know what it's like to be sitting at a closing table and the lender changes their mind. I know what it's like to commit to close on a certain day and you're a week late. I know what it's like to need a renovation reimbursement from the lender so that I can continue working on the house and improving the neighborhood. And we're insanely obsessed with removing red tape from the process and keeping it super customer focused and customer centric. We strive every day to be the easy button for real estate investment.
Yeah, yeah, I like that. I like that. Are there certain types of homes or markets that kind of work best in this? Is it everything? Is it commercial? Walk us through a little bit, sort of markets and sort of property types that you guys work with.
Yeah, so we don't target the big investor, the people you hear about on CNBC, the Blackstones that own tens of thousands of houses. We work with individual investors. Oftentimes, it's their first home to that they're going to flip or keep as a rental. Firefighters, teachers, just normal Americans that they find a house and they're like, I would like to own a investment property. And so we just help them do it, and we'll finance their first deal or their one deal. But we really focus on helping new and up and coming investors, not the big Wall Street firms or
Gotcha,
institutions.
gotcha. Is there like a flagship like loan program that you guys have, or something along those lines that you kind of always, not always, but point to the most in your world?
Yeah, our Big Mac, our core product is a fix and flip loan for 6 months to a real estate investor that's going to get in, get the house fixed up, and either sell it or keep it as a rental property.
Mm,
It's a quick loan. We close them in a couple days. It's low leverage, big word.
mm, mm,
If it's a $300,000 house, we never loan over 210,000. So
mm,
they have to go buy the house right. They have to get a discount. It may be a foreclosure. It may be an estate home. Sometimes one customer recently inherited the house, wanted to keep it, but did not have the personal money to get the repairs done where a tenant could move in. So we
mm,
gave them a loan and the
mm.
renovation money so they could go out, hire contractors, get the house improved, and then now they get to make money off of their parents' old house.
Yeah. Oh, interesting. We will definitely need to talk about that after this call here.
Well,
Like
hey, wait,
a
let me
situation like that.
I'll
Yeah,
interrupt
yeah,
you. A high percentage of landlords in America are what is known as an accidental landlord.
yeah.
Someone that inherited a home,
Yep.
someone that had to relocate for a job. Maybe they
Hmm.
didn't want to sell because the interest rates were high. Maybe they didn't want to sell because the market was bad, or maybe they hoped to move back one day. And we provide capital to those people every day.
Yeah. Yeah. I have a house from my in-laws that I got to figure out what to do with. So we'll cross that bridge here. Yeah. How do you guys sort of think about risk? How are you managing it? Like, as somebody's looking into it, like what does risk sort of look like? How do you sort of not give money to everybody, maybe? How does that work?
We don't do that. I'm very proud of our portfolio performance over the last 2 years. We have less than a 7% delinquency rate. We've only had foreclosures out of 380 loans. We do everything we can to enable the people. The number one thing, though, is we are an asset based lender. So I'm not
Mm,
looking at your W 2 income, right? I'm looking at the property. We're
mm,
using thousands of deals I've done and the intelligence that we have around the property to where if we do end up with the house, we can get out of it and preserve our capital.
mm,
Capital
mm,
preservation is number one. And we keep the loan terms really short, like 6 months, so
mm.
that we're not exposed to long term market cycles.
Gotcha, gotcha. That makes sense. That's smart. That's very smart. Another thing I saw on the website that I'm very intrigued about is sort of this founders club. Can you walk me through what that actually is and what that means for people?
Yeah, so everyone that invests in the regulation crowdfunding offering ends up becoming a member of the Founders Club.
Mm,
So they get no application fees. They get discount on our standard fees. They get a little swag box. They
mm,
get monthly market updates and shareholder calls. I actually did a shareholder call today. And probably more importantly, they get to come to our annual shareholder conference. And the first one is in March here in Dallas. And it's where we share the company, we share the industry, we share the real estate market. You get to meet the other people that invested in the company. And, I'm a little silly, but I envision one day that's going to be like the big Apple conference where all these investors from across the nation come and we roll out new products and new offerings and really build a community around the product.
yeah, yeah. That's a very cool way of how we're doing it here. So, we've hinted at a couple times that you have a equity crowdfunding raise going on right now. Obviously, everything you just talked about leans right into doing a fundraising round for the crowd, for the community, for the Main Street investors. But what's the conversations like beforehand? Maybe as you're researching this, thinking about it, and then what ultimately made you pull the trigger to do a raise like this?
Simon Sinek, start with why. I've been told for years, I've been a pretty well seen person in the industry. I've been told for years, Tim, you should do crowdfunding. Tim, you should do crowdfunding. And I didn't understand it. And one day in December of 23, I just started Googling and I found Dealmaker was doing this raise for Picasso. And I invested in that to see what the
Mhm.
experience was like. And I thought this is perfect because I knew I wanted to be owned by my customers. I just didn't know how I would do it, and the Dealmaker team just made it super simple to pull the trigger.
Yeah. And how are you thinking about it maybe as of today, but maybe even the future, future rounds? How do you sort of think about it maybe in just the business plan of growth for you guys?
You know, this when this round closes, we're gonna take a real hard look at a Reg A plus. We wanna, get stable, get our financials done, grow more, maybe another year, not really sure. The idea would be to avoid even an IPO and like do a Reg A plus and really just focus on those retail investors. Community is just, you're going to hear me say it forever. We do a flywheel like in the book Good to Great.
Mhm.
Community is number one for us because this is a very tight knit company and industry. We want to feel like a credit union that loans money to real estate investors.
Sure, sure. How do you kind of ensure, maybe alignment between, the crowdfunding, people that are coming into this, some of the core borrowing base, but how do you sort of keep that world aligned, and just, just keep everybody kind of happy as they're going through these processes?
Well, as a lender, you never keep everyone happy, number one. But we offer discounts to our shareholders, but we don't offer credit exceptions. So we're very clear. It's your money. You don't want me to risk it any more than I want you to risk my money. And that's how we got the company started. And with investors, I mean, look, I mean, I have a mandate, right? I mean, they want me to grow this company's value. They want me to grow this company's profitability. We would love to get to a point where we did dividends and things like that. And we're just starting year 3 and all of that stuff is in the ideology. It's not
Right.
happening yet, but
Yeah.
we see a future where it does.
Yeah. So I always love in this portion where I always love to just say, Ternus makes money, right? For that person who just doesn't get it, I'm trying to tell my mom about this, somebody who's not plugged in. Turnus makes money how?
We make money by cycling capital 4 to 7 times a year. So when we loan money on a house, we're able to get that money back in 2 to 4 months by selling the note or financing it or something like that. And so we get to redeploy that capital. So Turnus makes money by recycling capital. That's really what we're good at. But we keep our money by making quality credit decisions and not risking tomorrow's stability for today's revenue.
Sure, sure. It's great. It's great. I want to move over a little bit around maybe some obstacles or challenges. It's been what you said, 2 years, I think, right? Is what we're talking about here. So, what's been the biggest obstacle or the thing that's just been we had to get this right over the last couple of years?
Biggest obstacle is having a super type A CEO and hiring the right team to make sure that I'm not surrounded by yes people and I'm surrounded by people that keep us to our mission. And they have built an amazing team that has no problem telling me no. And they know I love it because when you tell me no, I don't accept it. I'm like, okay, then how? Right?
Hmm.
Tell me how, right? We don't accept the status quo. So it's building a culture of creativity, of consistency, of disciplined thought and disciplined action. And that's the biggest thing.
Yeah. I guess, and as yourself, as you've gone through multiple, iterations like we started with, how do you sort of keep yourself level headed around the ups and downs of just any business? But I mean, you're still 2 years in, you're doing a raise right now, a lot of pressure on growing, right, for the investors. So how do you just sort of stay level headed just as yourself as an entrepreneur as you're navigating these waters?
Someone asked me one time to tell them about the first real estate deal I ever did alone. And the answer is I've never done anything alone. I have an amazing CEO coach that has done this before, that I've known for over 10 years, that I worked with at another public company we took public. I am a student of the game and I subscribe to the Google philosophy. Everyone knows something and no one knows everything. And so I'm just a consummate learner and you're going to encounter problems when you're trying to be the pathfinder always gets shot, right? And so we embrace the challenges and we innovate solutions every day.
Yeah. Yeah. I love it. I love it. Let um, you know, you kind of mentioned it before too. Real estate does have ebb and flows based on outside factors. So as that's happening, how are you thinking about protecting, and preparing for these downturns or these upticks or tightening credit conditions maybe out there? Like how do you just sort of loosely protect as much as you can right now?
Jeff, the coolest part about real estate investing and financing is it's counter-cyclical. So when rates are dropping, landlords buy more houses than fix and flippers.
Mm,
When
mm,
rates are increasing and values are dropping, fix and flippers come to the market because they can get a better deal.
yeah.
So last year, long-term rental loans was about 30% of our business. Now that we're entering a declining rate cycle, we believe that it will grow to 60 or 70% of our business.
Mm,
And we'll do that for a couple years. And then
mm,
the rate cycle will go the other way like it always does. And then the fix and flip and the bridge
mm.
business will pick up. And
Interesting.
so we don't have to time the market. We have to be available when our customers that are timing the market are there. And then there's some forward looking things. We look at declining home prices on a county level, and we look at the median home price, and we don't offer standard loan leverage. So if I normally give you 70% of the value, there's certain areas of the US right now where I won't go above 60
Mm,
because we're looking at the market data and they're declining a little fast. And so we need to build in the cushion because by being 40% under market, if market drops 10%, the customer can still find a way to pay me off.
mm, mm. Yeah, I was just going to ask about how technology and maybe AI is playing into this in your guys' world. I mean, I'm assuming it's what you're talking about right now is just trying to find these pockets or regions and making decisions based on that. Am I hearing that correctly? The way you were just describing it?
Yeah, absolutely. And we built a culture at the company since I started it with my own money and my partner's money and my family money. There's a culture of let's protect Tim's money at the company. And so even as we bring on shareholders, there's still this culture of protect the fortress, right? Because and even I've got great sales guys and gals that will tell me I don't think we should do this deal, but it fits. And when you can foster that culture, we even have contests to say no quicker. Because Jeff, you may, as a real estate investor, you may believe in that deal. And you may be able to find money somewhere else if I tell you no on the first day you call. And if I give you that courtesy, that respect, I'll tell you about my core values, and I'm really transparent, you'll call me on the next deal, right? You don't need to win every deal. As a matter of fact, most of the loans we close are the second or third deal the customer presents to us.
Yep. 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 It's a great value. I have the same thing in my world. The amount of startups that come to me and say we're ready to raise money, I'm like, no, you're not. Call me in a year. Call me in 18 months. And then they do, because yeah, you were gonna waste money with me flat out. Yeah, I don't want that headache. How do you guys sort of take on the investment side? I want to flip to the investment into the company. Are there objections or things that you've heard that you're trying to overcome at all? Just in that sort of space, is there just maybe a common theme that might have popped up that you're like, okay, I see what they're saying, or is it hard to get you to maybe explain this to investors? Just what has that sort of conversations been like?
I think the biggest problem we have is I'm an under promise, over deliver kind of guy. So I won't even skirt the line. Like, do I hope to pay dividends? Yes. Can I tell you
Hmm.
when? Nope. Right.
Yeah, right.
Do I think the company's worth what we're raising? Yep. Do I know when
Hmm.
it'll be worth more? Nope. And because I don't want to attract unhappy customers, investors, people, partners. I want to have. I'm one of those people. If you look at my personality profile, I love to win with others. And when I'm at the shareholder conference in March, I would rather be surrounded by 200 happy people than 1,000 people that are worried.
Yeah,
So we're just super transparent. And here's the most beautiful thing about our raise. We don't need the money. It's it's
yeah,
it's a strategy to
yeah.
get stickiness in the business and to grow the business. It's not a you need the money. So there's a big difference when you raise capital when you don't need money.
Yeah, totally. It completely changes the weight and the tone to some stuff right behind the scenes. So I guess as you guys are starting to think about this, where do you see maybe big milestones that at the 6 month, 12 month, 18 month? What are some of those milestones you guys kind of have in the forecast?
I was doing our annual kickoff meeting in Charlotte last week, and I was preparing some slides. I'm a big slide guy. And one of the things I noticed is we crossed the $65 million mark in capital deployed in December, and 30 million of it was in the last 6 months of last year. So when you think about it, we did 18 million in the first 12 months. And then we did, call it, I don't know, whatever 65 minus 30 is, another 20 or 25 million. And then we did over 30 million in the last 6 months. And so it took us 12 months to do our first 100 loans, 6 months to do the next 100 loans, and then 3 months to do the next 100 loans. So the milestones are assets under management. Like we're up to 30 million now. So watching that portfolio grow every month, watching our revenue grow. We did more revenue in fourth quarter than we did the rest of the year. So these are some milestones that we're watching. I hate to say KPIs because then I have to answer which KPIs are. They change every week. Days per close, big milestone, right? We watch, I get a daily dashboard that shows how many days per quote, how many days for processing, how many days for this or that. I sent an email out yesterday because I got my 4 p.m. report, and more than half of the metrics were green, meaning in the last 30 days, it was faster than the previous 30 days. So the fact that my team did that over the holidays, right? Like it was huge. And like, I wanted to celebrate it. So, I think with anything, what you measure can be improved. And I'm just a big data person. So I'm always sharing data, super transparent with the team, tell them when we're doing great, and I tell them when we're not.
That's helpful. When you describe sort of impact, what do you see as sort of the biggest impact that this company will have, maybe 20 years out, 30 years out? Where do you just see as like the most impactful thing for people?
I'd probably answer that differently if you and I were having a cup of coffee and it wasn't being recorded. The biggest thing that I'm excited about is technology. The way we're using AI right now, I believe will be a game changer in the private lending industry. The most beautiful thing about it is we don't have legacy technology that we have to migrate. We knew we would be building this technology. So when we started using our CRM 24 months ago, we used a massive Salesforce license contract that we didn't need. But we did it so that we would have our data and we could iteratively build upon it. So I envision a world where our customers will walk up to the homes, pull out their iPhone, open the Ternus app, which should be version 1 should be released this summer. They'll hit find the house, buy this house. They'll sync with Plaid. They'll get all their background and everything on there. They'll go around and snap pictures. AI will diagnose all the images, and an hour later, it's when would you like to close? Like, that technology is there, and it's already there in several different applications. And my VP of technology's job is to get it all into my application. And that's the exciting part. I intend to change. I had to change my words there. I intend to change the industry because we can use and deploy technology faster today than ever before. Number one, it's going to be guided by decades and decades of experience. Number two, and we don't have legacy technology slowing us down. So we can iterate faster than our competition.
My last question was going to be around competition. So you just set that up perfectly for me. It's almost like read my mind here. What is competition in your world? How do you define it? And how do you sort of think about it in your space?
This is one of the most fragmented industries that I've ever seen or I can even find today.
Yeah.
There was probably $100 billion worth of this product last year, and the largest market share would have been Kiavi, and they did 7.8 billion, I believe was the number.
Mm.
We've been institutionalizing this space for 10 years, and no one has a 20% market share. And if you read the book, the blue ocean, like it's still a blue ocean. So we view the grassroots approach of referral programs and shared ownership in combination with cutting edge technology, in combination with a customer focused lens as our real secret sauce.
Yeah, it's interesting. That's great. That's great. Where should people dive in? They want to learn more. They're excited about this conversation. Where should we send them?
Well, with these regulation crowdfunding offerings, you've got to go through the portal. So
Hmm.
invest.ternus.com. All of the offering docs are there. There's a discussion board there. Happy to answer questions. We're hosting some webinars next week. I'm pretty sure we're hosting webinars up to the day the offering closes.
Hmm.
So just hop on there, put your name in there. We'll get you some information. And you can always reach out to IR, investor relations at Ternus.com. If you don't see the webinar button and you want more information, that team will get you to the right place.
Awesome. And for all my listeners out there, you guys know, go to the show notes. I'll have all the links for everybody to go and click and get to the right direction. Tim, I appreciate you taking time out of your day. I know you're busy. Great conversation. It's honestly fascinating. Learned a ton about this sort of space, and yeah, I just think it's a very, very, very interesting product and system that you're building here. Really cool stuff. And all the investors, go check it out. Go look at it, and appreciate your time. Thanks so much, Tim.
Thanks, Jeff.